Good morning and welcome to GKBA Today, where here at the Greater Kendall Business Association, we have a great guest every time we do this. As always, a special thank you to Community News for this platform. We sincerely appreciate it. It helps us get the word out, and it helps our businesses, our members, get the word out about what they do. So without further ado, today we have Association Lending Services with us. We have Sachin and Errol. You guys are like soccer players. You only use one name, right? Is that how it works? All right, so tell me a little bit about yourself, Sachin. Where are you from originally, and how did you get into this business?
Sure, Carlos, thank you. Thanks for having us. My name is Sachin. I'm the founding principal of Association Lending Services. Originally, I'm from India. I was 18 years old when I got here, and I've been in this business for about 23 years now. I've been doing association lending for about 15 years and commercial real estate financing for a little over 20 years. How I got into this business, I was in the hotel business. I was an intern when I came here at the age of 18 years old, and at the age of 23 I transitioned into financing, and I've been doing it since then. It's been a great business, and I enjoy doing what we do, helping people, and it's been great. Thank you.
And how about you, Earl? I love it. That gets everybody's attention.
Well, my name is Errol Eisinger. I'm originally, as you know from my accent, from New York.
Yeah, I thought you were from Hialeah, but that's okay.
Well, here again, I have family in Hialeah.
Okay, all right.
Came down to University of Florida, accounting, finance.
Go Gators.
Went to work, right.
That's right.
Although, now not so good.
No, not so much, I get it.
But went into banking and then worked in the Bahamas as a cost accountant.
In the Bahamas?
In the Bahamas.
What kind of business?
Freeport. It's an affiliate of U.S. Steel.
Okay.
Bahamas Cement Company. And I was recruited to become the controller of a fast-growing real estate company. And I learned the real estate business. So from 1970 on, I've been in real estate investing, all aspects. I've been in banking as a commercial lending officer, and Sachin had contacted me about, working with him in association lending.
How did you meet?
It was at a seminar about 10, 12 years ago.
At least.
And I don't recall whether Sachin was a speaker or what, but we met, we talked, became friends, and we did some some loans prior to entering the association loan business.
Okay. So how did you, you come from an accounting background, you come from a hotel background.
Sure.
What attracted you to, both of you, to lending and real estate?
Sure. So I was 23 when I made the transition from hospitality into the banking business. I was a math and physics major back in India, where I was born and raised. And at the time in Ohio, I've been here for 20 years now, and I came from Cleveland, Ohio.
Okay.
And there was a bank called Ohio Savings Bank, and they were looking for people in the wholesale mortgage division. And what they did in that division was buying and selling loans. So they would take loans from correspondent, from brokers, and then they would sell it to the other investors, other banks. And that's how I got into this business. That's where I got my training. And I enjoy numbers, enjoy people, and I've been doing it since then. So it's almost now, well over 20 years now.
So you just went in cold into a business really you knew nothing about at that point, correct?
You are absolutely correct. I did not have any kind of background at the time. I was good with numbers. I could add, subtract, multiply fairly quickly and decently. And I learned the business on the job, and it's been very, very rewarding.
So how about you, Errol? You went from working for a division of U.S. Steel, crunching numbers, and how did your transition happen?
My uncle was a partner in a real estate firm, Pim Suchman Real Estate Company, across from Shorty's Barbecue at the time. And they were growing. They needed someone to act as controller. and they brought me over. And Cliff Suchman was my mentor, and he taught me all aspects of real estate. So after being with him for quite a number of years, branched out on my own. We did investments and all sorts of property management, all sorts of disciplines in the real estate field. And I spent a little time in commercial banking as a commercial loan officer. And then when this opportunity came, I felt that there was a big market for it, considering what was going on after the Champlain Tower. And Champlain Tower collapsed, unfortunately. A lot of people killed, and a lot of problems occurred, and new regulations came down. So Sachin was very familiar with the laws, the regulations, what was doing, and I was, good at meeting people and speaking to people and coming up with some leads and all. And he also does underwriting, so he can do something quickly. He knows whether it's bankable or not bankable, and if it's not bankable, we can do it privately.
Yeah, I've known you for a while, Earl, and giving out $100 bills is going to get you into some doors. So I salute you for that. I've had a lot of fun with my grandchildren with those $100 bills. But what I wanted to communicate was, and what I wanted to know really was, this whole thing with the Champlain Towers, is that when Association Lending Services started, or did it start before that?
It's actually, I've been doing this for about 15 years now.
Okay.
So
as Association Lending Services, or as another entity?
just providing the services of lending services
Okay.
to the associations.
Okay.
And then our company has been in existence for well over 10 years, but the
Okay.
Association Lending Services came into existence about 3 years ago. And of course, we saw this huge need because of what happened, changes in the laws. So we've been doing this under the Association Lending Services name for about 3 years now, but I've been doing this for 15 years, providing loans to these associations. And it's a very, very niche business, and there is a huge demand because things went from one end to the other end,
Right.
and people need help now as a result of that.
So I look at everything through a marketing lens, and nothing short of brilliant, because my favorite definition of marketing is find a need and fill it. And another thing, I forgot who said this, but the riches are in the niches. So you are in a fantastic space, and understand the ordeal that was Champlain Towers and the after effects of that, which you had the idea, the vision to there's needs beyond this. So I'm going to ask you, does this go beyond the local area? I mean, does this need exist throughout the country, the world?
I think, of course, there's tremendous need in our area because Florida is, in terms of the number of associations, I believe Florida is second in line after California. And across our country, in different states, Illinois, Pennsylvania, there are a number of associations, probably California, Florida, Illinois, Pennsylvania. So association living model, common interest living model is huge across the country.
Okay.
Of course, especially down in Florida. And after the demise of the Champlain Tower South, rules have been changed here in Florida, but they were also changed in other states from a safety perspective. So the demand is there and the need is there as a result of that.
I know you guys aren't engineers, but I'm curious, what were some of those changes? Do you know?
Sure. So what happened was Champlain Tower South, that was unfortunately back in 2021, in June, that tragedy happened. And as a result of that, here in Florida, Florida enacted milestone inspections. Buildings that were within 3 miles radius of the beach and outside the 3 miles radius, they needed to do these milestone inspections, which are essentially structural inspections,
Okay.
and which is the facade of the building. A structural engineer needed to examine all the catwalks, all the balconies, the roofing, and those are the changes that were implemented after the Champlain Tower South's demise. And similar changes were made in other states such as Illinois, California, where you needed to do these balcony inspections because of the life safety issue. So these changes that have been made are good changes, and I think they're making the buildings more safe and secure
Right.
as a result.
So where does your footprint, how large is your footprint as far as the areas that you service?
Sure. So we're based out of Florida, so our primary footprint is here, anywhere in Florida, but outside of Florida, all along the East Coast, Carolinas, Georgia, Illinois, Pennsylvania, Texas. So we're able to provide association financing services to the associations for all kinds of common area projects, including but not limited to concrete restoration, roofing, asphalt, seawalls, including the professional fees.
That leads me to my next question. How do you interact and actually help some of those entities you just mentioned, roofers,
Sure.
engineers, those types of firms? Can you help them as well as associations, or how does that work?
Absolutely. We help all the stakeholders, period, because all of us work together to get the project completed. Now, when it comes to associations, many times these projects are delayed because of lack of available financing. And when you don't have readily available funds, buildings have these deferred maintenance. As a result of that, individual owners cannot get the financing, and that can destabilize the values of these units. And then to mitigate that, you have many times associations would do a one-time large special assessment. Now, those people who have the money to pay for that, that is fine. But then there are folks who cannot afford to come up with $20,000, $40,000, $80,000, depending upon the scope of their work, all at the same time. And they end up putting their units on the market additionally to the units that are already on the market because of the deferred maintenance. And as a result of that, you have untimely sale because people are under tremendous financial pressure. And what we do is, for the associations, we provide a practical solution, which is stretch out these payments depending upon the scope of the job for 7 years, 10 years, 5 years, 12 years. And now, instead of having to pay $30,000, $40,000, you're paying $70 a month, $110 a month, depending upon the scope of the project. That's far more practical. It keeps people in their homes as opposed to having undue financial pressure where they have to put their property on the market unwillingly as a result of that. So it helps the associations maintain their property values and elevate their property values and maintaining the financial and structural integrity of their property. Now, going back to the professionals such as professional engineers, concrete restoration professionals, roofers, we help these professionals help their clients, which is association, timely and help them get paid for their services. Because if an association takes on a project where they don't have, let's say the cost of concrete restoration and the roofing combined is $2 million, and the association only had $300,000 in the reserve account, and they end up doing a special assessment for $1.7 million in this example, and they start the project with the concrete restoration company and with the roofing company, but they are collecting this money as the project is moving along. As a result of that, because you're collecting a large sum of money over a short span of time, that in many cases creates collections issue. And in those scenarios, the association will come back to the contractor and say, hey, can you give us a credit? Can you slow it down? And it creates a lot of friction, which is not a happy situation. And it can create a huge financial burden for the association and for the contractors and for the engineers and the people who are associated with these projects. So our services, I think it holistically helps everybody involved, and it provides a great deal of peace of mind and value, and makes it a viable solution for all of the stakeholders.
So
Carlos,
go ahead.
let me just add
Go ahead.
one more thing to it. A lot of times, if there's any delays, the price of materials, the price of labor,
That's right.
everything is going up. So the budget has changed, this has changed, that's changed. We can underwrite it within 48 hours once we get all the documents we require. We have institutions that work with us that specialize in association financing. And therefore, we can save a lot of time and money, and they do not have a lot of the restrictions that the banks down here have, for instance, rental units and all, requiring your reserves, your operating accounts, your firstborn, etc.
Yeah, so it's, I can only imagine, and I don't know if you guys have run into this at the condo owner's level, but I can only imagine somebody getting an $80,000 bill. Hey, you need to do this, or you need to sell your unit. Have you seen that firsthand, or yeah?
Yeah, unfortunately, this practice, because of the changes in the laws, it has become more common than not. And to your point, it puts tremendous pressure on these people. And in many cases, what happens, like Errol said, because you don't have the money available right now, you're having to wait, and these homeowners are they are trying to get a home equity line of credit. Many of them are on a fixed income.
Right.
They have to qualify for these loans. They have to provide their 3 years tax returns. A bank has to hire an appraiser. Then there's title company involved. So it's a pretty long process of 90 to 120 days if all goes well. And then
Right.
there's no guarantee at the end that they're going to qualify because of one reason or the other reason. And you have got 200, 300 of these property owners who are trying to figure out on their own. That creates a very tough environment for the board of directors and for the property manager. In the meantime, city is asking you, hey, you haven't made all of these needed repairs, and you're getting violations. And God forbid, because of that, it could lead to litigation. And
Fines, litigation, yeah.
All of these things make, it makes the problem 10 times worse. So that's where Association Lending Services comes into the picture and helps all the stakeholders, and that pre-planning and doing that underwriting and having that dedicated service provider to the associations for the financing, because it's the most important piece, the most important relationship, and the most important liability on the balance sheet. So having professional representation is absolutely necessary.
So you've got the pressure of just, you've got this burden. But I could imagine if there are, maintenance delays, if there are fines, if, there's lawsuits now, what does that do to the property value of my condo?
Right.
I mean, how bad can it get?
I mean, look, if you have a deferred maintenance, I know that we are on the commercial side, we do commercial financing because
Right.
the association is not for profit and it's a corporation. But for the individual unit owners, when they are trying to do their individual financing, and you have all these deferred maintenance, and you have, unfortunately, litigation at the same time, and you have fines from the city, more than likely that bank is not going to go through. So now, essentially, all the buy and sell transactions totally get stuck. They come to a halt. And what happens to the values is, you have people at the same time with the large special assessment who cannot afford $80,000, $75,000. And as a result of that, you have too many units on the market, and that has a downward pressure, negative pressure, which is why we've been reading about these headlines that the values of the condos have been going down. So that creates not a good situation for the individual unit owners.
Most of the loans are through Fannie Mae and Freddie Mac, and there was an article in the paper a couple of months ago that there's a blacklist of condominium projects that they will not finance the individual units, which makes it more difficult and more expensive if someone is trying to get financing. So as a result, we are supplying a benefit to them in that, one, we're keeping them in the market, keeping them in their unit,
Right.
where in this generation, the children are moving back to the parents. But if they sell their units at a loss or at a lower price and they don't know where to go, what are they going to do? They're going to move in with their children.
Right.
So this is a benefit that we provide.
they get to stay in their condo.
Absolutely, as opposed to selling them untimely and at a loss. It provides a practical solution for everyone. So let's say that you have X number of people, 20% of the people in an association that can afford to pay.
Right.
Well, they are not sharing in the cost of that. But those people who are not able to afford that one-time lump sum, they can now spread it out, and they're not having to put their units on the market untimely. Now that's helping the entire community. It's not only just helping these
Right,
folks,
right.
it's helping the folks who are able to pay their share in one shot. It's elevating everybody's property values. It's good for the community. Work is being done on time. The building is looking better, younger, and it, like I said, it appreciates everybody's property values.
So my sense is that special assessments have always existed, but it's been, a little common area stuff here, a few things here. Did this whole, I'm going to call it craziness, with the huge assessments start a few years ago with what happened on the beach? Is that when it started?
Well, prior to that, we didn't have, in state of Florida, we did not have statewide these type of regulations where you have to do this. Associations needed to do these structural inspection reports, and as a result of that, the work is coming out of those, stemming from those structural inspections. So what this thing did was it created, imbalance in the supply and demand. All of a sudden, you've got, and Florida has so many associations. Like I said, we are, I believe, number 2 to California, and 49,000 associations. So all of a sudden, all of these people need the same services at the same time. As a result of that, the prices have gone up, and that created an imbalance in the market, and that's the reason for this.
Got it. So is this restricted to a certain type of building, or is it any homeowners association? I mean, could it be common areas in a neighborhood of single-family homes, or is this just large structures?
Sure. So as far as doing these inspections, the milestone inspections, these milestone inspections are for 3-story or higher.
Okay.
That's what they are limited to. But as far as depending upon where you live, in some counties you have to do these 40 and 50-year certification, like
Right.
Broward County, Dade County, which is a good thing.
Yeah.
But as far as a homeowners association is concerned, that's different because you have single-family detached homes, so it may not be applicable to the homeowners association. But all of these high-rise buildings, 3 stories or more, they are subject to these new rules, which are imperative for safety. So that's the difference between a common area work stemming from these inspections in a homeowners associations versus a 3-story or higher condominium association building.
So let's say there's a 3-story or larger building, and they're going to have their inspection, their milestone inspection. Are these large special assessments, are they more about, it's not if, it's when it happens? Because after 50 years, I imagine you're going to find something. So is that pretty much the rule of thumb?
As the building ages, you of course have more and more issues, and
Right.
things get expensive. So it's imperative that a 40, 50-year-old building versus a 10-year-old building would have much different needs, and as a result of that, the cost of taking care of those items will be higher in an older structure. But I think the key thing is that if you do these things gradually, every 5 to 8 years, you go ahead and inspect these buildings, you take care of the things perhaps in pieces as opposed to letting them get built up, because then it becomes super expensive. So I think having a gradual program is far more feasible as opposed to letting it all build up and then having to pay millions of dollars at the same time. I think it's better to do it in a more planned way.
So you that's the second time you mentioned it. You used the word pre-planning a little while ago. Now planning. How can you help with planning something like that out?
Sure. So from a financial perspective, what we do is we do the underwriting in-house. We look at their financials, current year financials, their past 3 years financials, scope of the work that comes from the professional engineer, and we can assess, whether this association can qualify for a $2 million loan, $1.5 million loan, or a $5 million loan over 10 years, over 15 years, over 12 years. And with that financial stability, you have the funds up front, you know what you qualify for, as opposed to collecting as you're going, which can potentially create receivables.
Delays.
Delays and receivables. And in some instances, I've seen where the project completely came to a halt, and they had to go back to the drawing board. They had to do another special assessment, and that's never a happy situation. The contractor is not getting paid. So as far as our services are concerned, which is providing financing to the associations, which is a commercial loan, there is no personal guarantee from any of the unit owners. There is no lien on anybody's unit.
Personal, yeah.
Correct. So it's completely a commercial loan. I think we really can provide financial stability to these associations, which is imperative because majority of the time is the lack of available funds that creates these problems.
So I run an association. I know nothing about financing. Why shouldn't I pick up the phone and call my bank to resolve this problem?
Sure. So, when you're calling a bank to, depending upon which bank you're calling, majority of the banks, they are not in this business. They don't provide financing to not-for-profit associations.
Okay.
Majority of them, they do home equity lines of credit. They open up a checking account. They open up a savings account. They sell you a little credit card machine. They open up a reserve account, or they'll lend money for purchase of a home or a refinance of a home, or commercial real estate owner-occupied. If you're a dentist, if you are a physician, and you're buying your own office, they are happy to help with that. And many times what happens is, or they'll do financing for SBA, because many of these loans are packaged and they're resold. And these banks are not retaining the risk on their own balance sheet, which is more profitable as opposed to not-for-profit associations. So it's a very niche business, and the person that you're speaking to, they are not just dedicated to doing, even if the bank, let's say, was in this business, and many times we have seen people have come and gone into this from this business, and they like the deposits, but as far as the lending is concerned, that's totally different period. And when you're talking to this individual, that person is opening up a checking account, a reserve account, a home equity line of credit. This is not what they're dedicated to. So, and especially given the scope of the work and the financial pressure these associations are in, cost is rising as you're waiting. And like I said, this is the largest relationship, largest liability on the balance sheet. You must have somebody who's dedicated to this line of business, who has the experience of years and years having gone through these things, and does really good to the bottom line for an association in the short run as well as in the long run.
How do you get the word out about association lending services? Because this could be an area, for example, condo owner gets an assessment. Do they know? Does the association know what to do? So how do you get the word out?
Absolutely. So we do a lot of educational outreach as well. We
Okay.
provide education to property managers.
So you go and actually physically present, or?
Yes.
Okay.
We teach a course about capital projects done right.
Okay.
These things have a direct.
And does Earl give these away at these meetings?
all the time.
Okay.
We try to do we partner up with the property management firms, we
Okay.
partner up with the professional engineers, as well as concrete restoration companies and roofers. So that's how we are able to service the community. And we speak to the people, we underwrite everything up front, and usually it takes us about 45 to 60 days. We work with the association's council.
Okay.
We work with the professional engineers, so we work with all of the stakeholders and usually get these things closed in about 45 to 60 days.
Okay. In wrapping up, do any of you have a message for associations out there or condo owners? What should they know today?
I think what they should do is they should partner up, collaborate with the right people, and having somebody like us who's dedicated to this line of business, who's not doing 10 other things, is the key to success. Because if you don't have right partners, right collaboration, that causes delays, and those delays, like Errol said, are very expensive. So it doesn't pay it's penny wise and pound foolish when you're not dealing with the right people, because everything is adding up, and that hurts everybody. And our services are essential for the financial and the structural integrity of these buildings.
Yeah. Yeah, I mean, I think the most important message, and you mentioned it, is that you're going to be safe. You're going to be safe. Your balcony's not going to fall. And, that's obviously incredibly important, and we don't want another catastrophe on our hands in this community. Thank you for the work you guys do. The time flies here. It's only a half-hour show, so you can come back if you'd like. And thank you for being a member of the Greater Kendall Business Association. We really appreciate it. You guys offer a very valuable service to the community. So keep it up. Keep up the good work.
Thank you, Carlos. Thanks for having us.
Thank you, Carlos.
Thank you for being here, and thank you for being on another edition of GKBA Today. We'll catch you next time.